Good morning, it's Harvey Jackson. Just going to get through some of the news that happened over the long weekend. U.S. and China trade tensions are heating up, as a result of the just rare earth exports, so that China's slowing that down. And then the U.S. shipping fees of $50 or $56 per ton. China put on a retaliatory trade against it. Now, a lot of those things were pretty well known in the market ahead of time, but it's just the slowdown and almost no exports of any great substance. Tariffs are still on. Been multiple letters going back and forth. Trump and Xi, just how they're going to treat the rest of the world here too. Just to our trade report, you can see the crush number is at 233,000 metric tons crushed last week. That puts us at a 86.2 crush capacity utilization. Year to date is 86.4, so just tracking ahead of even last year. Here's our canola trade positions. So the newest one is short January canola at 628 and exit at 582. And that's was in a profitable position. I think it might be just maybe net zero right now as we look at that market. Here's your Minneapolis and your Kansas wheat, and there was trade suggestions a couple weeks ago or just even last week, just going short on both of them. So Minneapolis going short, and that is just a reversal to take away some of this position that's already in there. Now, we don't know how far short we're going to go, even though we do have an exit or take profit at 542 from 565. And then on the Kansas, take profit at 462 and enter in at 497. Here's your soybean and your corn, and both of them are. This is a reversal of the previous trade when or if it gets to the 412, and this is just a short position that's already been active and already started. Trump is convinced Netanyahu. Israel will take the deal, and within an hour of this broadcasting, there's already some breaking of the ceasefire. As if you want to read the article, there was some Palestinians walking towards the line where some of the soldiers were in the northern part of the Gaza, and 6 people were killed. Textiles. So this is just again some of the theme that I've been talking about. The shift in trade away from U.S. Indian textiles look to gain some business in Europe. Crude oil continues to fall below the $57 or $60 barrel, so it's gone lower here, and some of that is just some of the trade tensions as well. Band of weather still looks like it's going to be hitting us in the prairies, and that's going to continue. We had some fair bit of moisture hit us already. Looking at accumulated maybe 3 to 4 inches or 2 to 3 inches anyway of actual rainfall. Here's your active weather, and here's your weather coming up here. So you get the next few days. It looks like there's going to be some more showers hitting us. Karen Braun posted some of this Chinese imports, and China's imported the second highest September on record. So you can see that they've actually have an elevated pace, and this is not coming just from the U.S. It's including everybody. And yesterday, CONAB still had their report, regardless of the USDA, and it's pushing out at a record pace. You can see the building of the weather in the key areas where they need moisture before they will plant, and looks like they're getting some. Just a quick look at the markets. Canola is up $4.10. Rapeseed is down 3 1/4. Soybean oil is down 3/4 penny, below the 50 cent per pound mark. Palm oil is just trading around 4,400 ringgit. Crude oil at 57.92. and soybeans down 4.5, and wheats are down anywhere from 1 cent on spring wheat and 3 to 3.5 on your Chicago, and corn just fractionally down, and the Canadian dollar down a little bit as well. Here's your canola basically trading sideways as if it's respecting your 50-day or 20-day moving average, and continues to trade sideways here. Here's your January futures, which we have some positions on, and that's basically trading sideways as well. When you look at rapeseed, it's at the top end of the range of the channel going down, but it's trying to get into mid-range for sure. When you look at the price differential between European canola and or European rapeseed and canola, it's $150 in Canadian dollars. So it's $150 more expensive. I think this could put some range for some exports for Canadian canola to be find its way into the market. And I'm super surprised or convicted that this 200-day moving average is definitely adding support to soybean oil futures. You can see that it's respected pretty well. It's traded through it, but no consecutive days of close, even though we're down today. If it breaks there, we're looking into this range down here in the 47 cents. Soybean seed futures, again, just looking to retrace back to a couple of weeks ago lows that we had, and then you got your pivot extension here as well. Palm oil off its highs or multi-week kind of highs there, and it needs to chop around a little wee bit, but it is lower for the last 3 trading sessions. Crude oil, as I stated earlier, it looks like it's going to retest this 55 potential here. Canadian dollar keeps leaking lower with a downside target at 71 and a quarter. And the opposite is when you look at the Brazilian U.S. real, and it's gained some strength and coming back towards that 200-day moving average. So it's making their product a little bit more affordable. Have a look at spring wheat. I don't like to talk about it because I think everybody looking at that chart just knows how painful that is to look at. Same thing with Kansas. And if you look at Kansas in a longer light here, you can see we're going back to that area there where we made multiple kind of the lows that we're making is actually some of the highs. Here's Chicago, same idea. Your milling wheat, kind of trading more sideways. So if there's any optimism, it's looking for that complex from the MATIF that's trading kind of sideways here. Corn, it's getting back into that 38.2 retracement value, or below the 50%. So if it's going to fail, it could fail all the way back down to that 390 area. Corn futures, just looking at a longer timeline. So right where we are is actually multiple year kind of highs that used to get made. Live cattle making new highs, same with the feeder cattle. That's all I have for you today.